I would like to also let you know that you can write your questions in the chat, and in the end of the seminar, we will answer these questions together. So now it's already time to hand over the words to Chio and Ricardo.
Okay, great. So now I'm gonna be sharing our screen, right?
Yes, you can start sharing your screen.
That's great. Okay, let me put it full screen so everyone can see it. And yeah, that's it. So we can start. Hi, everyone. Thank you for the nice presentation and also for the invitation from the Czech Chamber to collaborate and also to share our experiences today with all of you. Well, I can introduce myself first, and then I'll pass to Ricardo so he can follow up. As Lucas already mentioned, my name is Armando Flores Chiu. Almost everyone in Shanghai calls me Chiu. I've been in Asia for 5.5 years already, sometime in Hong Kong, sometime in Shanghai. And over the last, all my time in Shanghai, I've been working as I call it as a coach in personal finances, because what I try to help people is to take healthier money decisions. That's why I have my own brand, which is the Financially Fit brand, because it's all about how we react and how we have our money habits and how these are going to have an impact to our career and our life as well. So, well, thanks. I'm very happy to join. And now I can pass it to Ricardo so he can also introduce himself.
Sure. Hello, everyone. My name is Ricardo Sierra. It's my 8th year here in Shanghai, and in Asia for that matter. And well, as same as Chu just said, the main goal or the main things that I've been doing since I arrived here is helping others in different things. You're going to see it when we go through the experiences, going through this presentation. And what we want from all of you guys is to understand that we don't have to be an extremely exceptional person like Bill Gates or Steve Jobs or so on. We just have to understand some clear things about our lives, about our finances. And just with that, we're going to be above the game and above many other people. And that's what we will be using, not only on crisis, but also on blooming times.
That's great.
So, yeah, with that said, let's hit it up with the presentation. So it's very interesting when we think here, crisis. Yeah, like crisis being a possible opportunity or not. So in this regard, we would like to ask you a question. If you guys can also in the chat give your answers, please, the 20 of you, which is, who believes that a crisis is a good time for making an investment? So please, if you can, just write in the chat, who believes that a crisis is a good time for making an investment? Just gonna give some seconds. So who believes crisis is a good time for making investments? If you think that is not, you can also say no. It's good. Okay, so yes, sure. Yes, I do. Yes, yes and no. Okay, there's no yes. Yes, it is. Yes. Okay, so the vast majority believes that a crisis is full of opportunities to invest. And I agree. I believe the same, such as Chu. Now that we have that, I would like to ask you, well, did you invest already during this crisis? For those that say yes, I would like to just know, also in a yes or no question, if you've done it. Okay, there is a yes. Anytime is opportunity time. Very good. No, no, yes. Haven't. Okay. No, yes, not yet. Willing to go down further. Okay, that's a valid point as well. No, not really yet. Very good. So as we can see with this, we believe that it is a good time to invest. Nevertheless, there's something that is holding us down. And usually it's the same when a crisis is happening. We believe that it's a good time, or where everything is booming and the economy is just on the top. That, well, we believe that everyone is investing and we should do it as well. So if the times are the correct ones, then why we haven't invested. And we're going to see it in the next slide. We can see, for example, like that every time we can be investing, every time it's something that we could actually work. I'm going to talk about my investments, the ones that I have at the moment. As I said, I'm not Steve Jobs, and I don't even try to compare myself with it. And just as I said at the beginning, as I want everyone after we see this to be above average and understand some principal things. Now, what you see in the screen are 6 of my investments. I have my passive ones, which is part of it is in equity in NASDAQ. And if you see NASDAQ in the past 12 months, it just came back to the same value, around 7,000 points. Nevertheless, I'm still making 1% of it, even though this year had been dramatically lower than 1%. Why? We're going to explain that strategy later on. I also own a dance studio in Shanghai since 2015. Whereas I had 100% and now I have 25%. I sold part of the shares. The dance studio, unfortunately, because of coronavirus, had not been able to resume classes, and that investment is losing. Certificate deposits, something that we can all do in a bank, either at home or in China, or if China is your home, of course. Mine are in the US. Those are making right now. And I also have an Airbnb here in Shanghai, which unfortunately is also not giving me any profit, but only expenses. As you see, out of my 4 passive investments, 2 of them are generating income and 2 are not, which is something normal. And that's why we have to diversify. Now, my active ones, one is Forex, which we're not going to talk much about Forex today, but I don't recommend anyone to join Forex if you don't understand it. It's highly speculative, and it has to be with money and that you could lose and not feel too uncomfortable with it. That said, I'm also a general manager of BMI and RSL, which we're not going to promote my companies too much, but they're also about finances. So with this, what I want to show is that if we diversify, if we try to invest, and some of these investments, I did them during crisis, some of them during a blooming economy, at the end, regardless of the time, some of them are going to be generating income and some of them won't. And at the end of this workshop, this webinar, what we want is for you to know which of those asset classes you would like to have and start investing on them. And then know as a fact that they will give you money sometimes, but sometimes they will be also a bit costly. Now, if we go on the next slide, we'll see choose experience, and then we can also see from his point of view which ones are the experiences that he has.
Yeah.
No.
We have maybe some connection problems with Chio, is it?
I think we lost the connection.
He's back now.
He's
back. Yeah, he's back.
Sorry about that. I don't know what happened. So.
Can you please share the screen again, Chio? I think we lost the screen as well.
Okay, cool. Okay, yeah, there it is. Sorry about that. Some problems with technical issues, but yeah, I'm back. So yeah, I was saying, thanks a lot for your sharing, Ricardo. That's very interesting to hear what you've been doing. And yeah, the good thing is that, as you said, it's all about having different things, right? So from my side, in my passive part, which are the things that I'm not actively managed, I just let them work for themselves. So I have some mutual funds, of course. We know, and as already Lucas explained, we've seen one of the biggest market drops in the last more than 10 years. So of course, some of them are already down compared to what I used to have 2 months ago, 3 months ago. But it's okay because I know that those are not for today. I'm not gonna retire today, sadly. I wish I could, but it's okay. I know, so those are definitely losing some value right now, but at the same time, I'm trying to put more money on that because everything is at a discount. At the same time, I also have some, it's P2P, which is peer-to-peer loans. I mean, you can do something similar like certificate deposit, or other kind of fixed investments. So these ones tend to be a little bit higher risk than others, but they're right now, actually, they're still producing money. They haven't really changed anything about that. So that's actually still going, regardless of what's going on right now with the whole coronavirus. And I'm also getting paid by the assets I manage for my clients. I get, so it's called assets under management. I get some part of that to help them control of that. So that's a passive income that I still receive. And I'm also working hard with my clients as well to help them go towards their goals. And in terms of what is my active things that I still need to do, and regardless of what's going on. So one is my day-to-day job, which is being a coach in personal finance. So that one definitely has been impacted during this crisis because more people feel uncertain about what's going on, especially us foreigners living in a foreign country. There are even more uncertainties. So that definitely has impacted in some way to my regular business. But at the same time, I also have, well, with my family, some rental properties back in Mexico, similar, some in Airbnb, some for students. So those definitely are not making any money these days because schools are closed. So most of the tenants are usually from different states. So right now they went back home. So of course, that's just a liability. But at the same, as Ricardo said, that's why you don't put all your eggs in just one basket. Because if I was 100% relying on those properties, then I wouldn't be here right now and I'll be in a really bad position. So the important thing is to understand that you're gonna put everything or all your resources in different ways according to your goals, which we're gonna touch on that later on. But yeah, that's from my side, and I'll give the microphone back to you, Ricardo, so you can continue sharing.
Thank you. So as you guys can see, it's not about making an investment, it's about investing. And something very particular is that when we talk about investing, there is, in all of the workshops that I've done, there is a misconception about what investing is, and actually tends to be confused with gambling. And it's very interesting to know the difference. You can see here, investing, basically you do have a strategy, and in gambling you don't. But if I would like to do another open question for you guys, would be a definition of investing. Like, if anyone could write in the chat, please, what do you think investing is? Like, just for you. It could be a word, you can give me a phrase, anything you want. Just please write in the chat, what is investing? What is investing, or what is an investment? So I'm just gonna put, what is an investment? So if anyone would like to write on it, just want to feel what is an investment for you guys in this way. So Julia says, putting your money to work. Very good. That's what we want from the investment. Any other one that could, just one or two more answers would be great. It's a long-term hope, strategic gain, delayed consumption. Wow, philosophical one, Lucas. Very good. So with this, oh, there's more. Beating the inflation. Okay, that's something that we want to do with investments as well. Spending money to earn more later. Very good. Most of the answers have been money-driven investments, which makes sense. In a broader concept, investment is not only about placing our money into receiving more money, or placing our money just to receive a benefit in the future, buying an asset and hopes that will become more valuable. Very good. It's also about giving our time. For example, in a relationship, we invest our time in a relationship because we want to be with our partner in the long term. And this might be a good investment or a bad investment, depending on how it goes. You can give your time into a project, into try to prove in a hypothesis that at the end you could or maybe you could not prove. There's different investments that we can do. So when we see an investment, let's not see it only as money, but also as other currencies, such as time. So any resource that we have, that we can exchange by another resource, and then obtain something of higher value, then that would be an investment. As you guys had said, buying an asset, but it will become of more valuable. Very good. But when you gamble, aren't you doing the same? If I go to a casino and I just play the roulette for, let's say, 50 euros, and I'm placing my 50 euros in the roulette, and I'm hoping to get the double zero because that's the number I put in order to get a higher value. Then if it's so similar, what is the difference between investing and gambling? If anyone can just write, what do you believe it is? Why is it investing completely different from gambling? Well, besides the strategy that we have in the back. But preparation, very good. Preparation is something key, as John has said. Risk distribution, there you go. And that you are controlling it. Okay, you manage or mitigate the risk, which in one way. One can control the risks. Very good, very good. So most of the things are related to risks, and I agree. Most of our investments, we have to understand how much risk are we putting into it. So if we see the 6 investments that I show you guys, CDs. A CD has a certificate deposit. For those that don't know what it is, CD is basically giving your own money to the bank, and they will freeze it for about 13 months. And after those 13 months, they will give you about 2.2% or 1% or 0.5%, depending on the time or the bank. So let's say that they will give you a 1%. So in this investment, you are giving your own money for, let's say, $10,000 to the bank, and they will keep it for 13 months. You cannot use it, and 13 months later, you will have your $10,000 plus a 1%. We fulfill all of the investment parts, and we are in control of it. And the risk distribution is also there. So I agree, that is amazing. But for example, when I do Forex, which I don't recommend people to do Forex right now, this is for another workshop. In Forex, for example, there is no guarantee 1%. And the deviation from the amount of money that I could make or the one that I could lose is actually way higher than 1%. Nevertheless, it's also not gambling, it's still an investment. Why? Because I have something, which is what you all need to have as well whenever you invest, which is the next slide, which is not only the experience, but also the knowledge. So when we see these 3 books, for example, are 3 books that I recommend everyone to read. I hope that Rich Dad Poor Dad, you had read it before. If not, this book, I read it when I was 16 years old, and it did change my life. It's very basic. I'm an accountant, I forgot to say that, and I have a master in economics. But this book, even though for accountants and for people with masters in economics have new information, it's about your personal life and your personal finance. What is an income? What is an expense? What is a liability, an asset, your capital? Extremely important. So if there's something from this webinar, would be to read that book. Strongly advise it. Had someone read it, by the way? Please say yes in the comments if you had. Oh, very good, too. There you go, Mena as well, Lucas as well. It's a very, very nice book. And then again, strongly advised. Now, Principles of Ray Dalio. For those that do not know who Ray Dalio is, he is the CEO, well, the founder of Bridgewaters, which is the biggest hedge fund in the world, with over $170 billion in assets. It's in assets under management. And he was the one that predicted, or one of the funds that predicted the 2008 crisis, and he actually made a ridiculous amount of money, for saying it in a very colloquial way, during the crisis of 2008. And he explains not only how he did it, but the principles of his company and how everything should be a meritocracy. And every one of our partners and our business, and same with our investments. There should be merit in it, and we have to understand it. Had anyone read this book by any chance? If so, please, I would like, oh, nice, Jim. Wow. Oh, look, Lucas as well again. Amazing. I'm loving this. And well, the third one is types of books that I recommend to read as well in order to get knowledge. But this is more psychological. It's about understanding us. Ray Dalio also lost everything in 2000, I think. Yeah, well, John, as you said, if you see Rich Dad Poor Dad, for example, at some point in his life, in like all of the circle of failure, which we all have to go through, you have the process of learning and then of going up. And indeed, same as myself, out of these 6 investments at some points, even though they're in negative, in the long run, they've been not only in positive, but in a very nice situation that it is right now. So it's true. Failing is part of the process. So we learn about it. I think it was Warren Buffett said, failing is not failing, it's just getting you closer to be right. And that said, the third book, it's about psychology. It's a winner of a Nobel Prize in economics, Mr. Daniel, and he divides the brain basically in two systems, system 1 and system 2. And this is really going to help you whenever you have to make any decision, not only in finance, but also in your life. So these three types of books, let's say mentoring books, such as Rich Dad Poor Dad, purely financial books like Principles, or psychological books such as Thinking Fast and Slow, will create that strategy that will keep you away from gambling and will keep you closer to investing. And a strategy, as we know, is not only a knowledge, there's also experience. And experience, you can either do it yourself, trial and error, or you can have someone that already have that knowledge and experience, and that can guide you in the process, such as a mentor, which is important not only in finance, but also in any sport we want to get better at. That said, if we go into now something more practical, in the next slide, we're going to talk about what I call the RSL pyramid. And this is something really important and to grasp. And it looks super simple. It looks like something that we all know in some part of our brain. But the thing is that actually applying this is what's going to make the difference. As you can see in this pyramid, we can see three different levels: a protection level, saving levels, and an investment level. Most of us that believe that investing is really good, and whether sometimes it's good to invest or sometimes or not, or so on, we still don't do it. And the reason we don't do it is because the order that we try to do in this pyramid. If we try investing at once without having a big protection on the bottom, most likely whenever any of our investments goes down, we will panic. And panic is one of the biggest reasons we have heard that drives economy down. And that panic goes from individual to individual. The reason not to have panic is to have a good foundation. And this webinar about the books that we said, it's also going to be in order to make this transition into having protection and then investing. Because you protect yourself in order to invest. You don't invest in order to protect yourself, because there's going to be nothing to protect. So with this in mind, you are also going to see not only the protection, but the savings part. Now, the saving levels is going to be about the goals of why do you want to do it. Because without goals, if your only reason is to make money, you might succeed, but more people do not succeed when they only have that goal. And the third level, which is the investment level, that one is the one where you will diversify, when you understand what you want, when you have not only your knowledge and the experience of others or your own experience, and then you will be investing not only in one thing, but in many. Hope everything is, if any question, remember you can ask in the chat, and we're gonna check them at the end in the Q&As. If we continue to the next slide, because we're gonna break down this pyramid in different parts, okay? The protection level is very simple. What we have there are 4 points. 4 points that, in my experience and the experience of others that I have read and the knowledge that I have acquired and my mentors, we agree that 4 pillars are the ones that are necessary for each person to make a correct investment. Now, everyone can invest in any moment of life. It is true. But to make a correct strategy, to not gamble, but actually invest. The first thing, as we see, is, well, the 4 points that we have, are emergency funds, buy and sell, which is money that you can use on a daily basis, life insurance to protect yourself, and a health insurance as well to protect yourself. Now, these 4 things are basically mandatory. They are required for anyone that wants to do any kind of investment. If we go into the detail of each of them, we're going to talk first about emergency funds. Now, I'm sure I'm not the only one that had to use some of its savings during any of this month. I was in December, and January, and February. I was traveling in Europe, and then I came back in February, and I had to be stuck here during the quarantine, which at the end, no one could work, and I had about like 2 weeks without income. So I had to use some of that emergency funds. Was most likely some of you guys were also in a similar situation or have a friend that was there. So you can answer as well if you want, if you do have an emergency fund. So, or if you thought about having one at least. Now, or the definition of it. When we talked about emergency funds, we're talking about 4 to 6 months of expenses that you keep in the bank. That's it. I know it sounds very boring. It sounds like, oh my God, Ricardo, I want to, invest in something amazing. Not yet. You need to have 4 months. If your expenses are, for example, $2,000, you need to have between $8,000 to $12,000 in the bank. You need to have it liquid. You need to have that money in case something happened, like this pandemic, like this crisis that just happened right now. Without having that, then you would go to your investments, and you'll have to get your investments that some of them might not be liquid. For example, my Airbnb, I cannot just sell the house or break the contract, or if I could, the penalties are quite high. So you need to have liquidity that you can use. And that liquidity has to be accessible in less than 48 hours. And that's going to be your emergency fund. Now, your emergency fund as well could be into short-term certificate deposits. Now, a certificate deposit, you can get it in any of the banks here, for example, and I'm not recommending ICBC or Bank of China. If you're in the US, Bank of America, Wells Fargo, any bank, they all have it. In Chinese, it's called Duanqi, and you can obtain it. It's going to give you about like a 2%, but nevertheless, it's something, it's a start, and they're usually very liquid. You can have them with clauses that you can actually withdraw it between 2 days or 3 months. So emergency funds, that's the most important thing to have. The second thing, though, after we create this 4 to 6 months of value, 4 or 6 months of our expenses, will be buy and sell money, as we can see. By the way, all the questions you can ask them, and we're gonna answer them at the end. Okay, and buy and sell is very simple as well. Is on top of those 4 to 6 months of expenses, you must have at least 1 month that you can use that is in cash. For example, we all here have electronic wallets such as WeChat and Alipay. If you're not in China, you might have a Velmo or Zelle or any other application in your home country. And that is required. You need to have that money accessible for you. And a physical wallet as well. So I know we don't use coins or bills anymore, but hey, your phone can get stolen, or you can lose the battery, or it falls down and breaks. And you will need money. So having an spare amount, either in your electronic wallet or your physical wallet, is also extremely important for any short emergency that might happen when you are on the road. That said, we'll go to the third pillar of the protection level, which is a life insurance. Now, life insurance is something we tend not to think too much about. It's understandable. Most of us do not like to think that we might one day perish, or in a young age. Nevertheless, for anyone that has a family, is basically the wheel that you will leave behind for your family. Not only that, when you have a life insurance, it can also be an investment. The Nasdaq that I said that it gives me a 1% regardless of how the market behaves, that's also my life insurance, which means that no matter what happens, I'm being covered with a substantial amount of money, thanks God. And not only that, if something happens to me, then my family will receive the money. And if I'm actually alive in about 20 years, then it's going to be part of my retirement plan because it has cash value inside. So as you can see, it's even an investment. This is required to be tranquil, to understand that your life can also affect others, and that you need to protect that life in order for the life of others to be protected. So right now we have our emergency funds, we have for buy and sell, we have for life insurance, and the last part would be our healthcare. Now, healthcare, it could be 2 different things. You can self-fund your healthcare, which means you make part of your emergency funds would be in case that you have to be to the doctor, or you make a higher emergency fund that would be for your healthcare, or most likely your employer is actually giving you one. and that's the one that you will use. So nevertheless, it's important to know, to have the peace of mind that we're going to have, if we unfortunately have an accident or have any inconvenience, we will be able to have the monetary or the liquidity in order to solve that issue. When you have this, when you have your emergency funds, when you have your buy and sell money, when you have your life insurance, when you have your healthcare, be it a self-funded healthcare or a health insurance, you will understand that there's no need to, like, the money that you use there is already 100% for protection. Now, once that money that is there protected, the rest of the money, you can either invest it or you can spend it, regardless of what you want. If you want to go to Spain, Barcelona, nice place, well, you use the excellence of that money to go and travel. If you want to invest into equity, you want to invest in an ETF or buy a property, you can also do it. But you will do it only after you are protected. So in case that something happens like this pandemic, you will not have to postpone your plans, either if they were for entertainment or to postpone your plans for investment. Hope that is very clear and very, very important. With that said, with understanding the protection level, we can go then to the saving level. Now, the saving levels, it's a bit harder to grasp, I would say, because it's a bit bigger, a bit broader. It's not as specific. Nevertheless, in the saving levels, the step 2, for calling it in one way, is composed by your personal savings, your retirement plan, and the knowledge that you will acquire in order to invest. What I want to say with this is, regarding personal savings, you will need to have a goal. And Chu is going to talk more about it in this second part. But goals are important. If you don't have a goal, you're just not going to be able to save that much. You will end up spending it, going out, or misusing that money. Now, retirement plan or retirement savings, and this is something extremely important that many of my clients and my friends, even family members, do not do. And this is one of those things that will put us above the average and will make us get advantages in this crisis. You should do something, or we recommend you, advise you, to do something called the 10% rule, which means every month that you receive a paycheck, you will grab 10% of that and you will put it in another account. And be very religious with it. If you, for example, earn 20,000 renminbis, 2,000 renminbis of those are going to go into the bank. If you earn 120,000 renminbis a month, then 12,000 of those will go into another bank account. If you do this religiously, then you will have to use the other 90% of your salary or the other 90% of your income, if you have different incomes more than salary, that will be used for either spending or for investment. And once you grab this, it's way different that when any of us at any given point of life said, oh, I want to invest, but I don't have any money to do it. Or, oh, I want to invest, but the market is so good that there's going to be a crisis later, so I'm just going to wait for the crisis. Then a crisis happened, and then you say, oh, I didn't have money now. Or worse, you say, oh, I have the money, but now I'm going to wait not for the crisis, but for the things to pick up better, because I don't know when it's going to be the bottom of the crisis. So all of these things, you need to understand that saving that and making small investments will get you farther than just making a huge one. And this will be the first investment that you will do, that you can start doing today. Well, the second one. The first one being the protection level, and the second one being 10% of your salary or your income to save it in a different account. I know it's boring. I agree. It's a very boring thing to say, but we're in the savings part. We cannot get speculative yet. We need to be protected, and then we need to start saving. And the third part is knowledge. Now, I love Audible, audible.com. Does anyone has Audible, by the way? If anyone has, you can please let me know. Audible or any books that you listen to, any app. They're amazing, amazing. Whenever I open a workshop, I ask the people how many books they read during the past 6 months. And the answers vary from 0 to 3, usually. With Audible, you have to read a book a day, basically, or you're just wasting money. And it is amazing because you end up with 12 books a year, at least, that you're reading. And that's so much knowledge that you get. and it's also inexpensive. It's an amazing investment that you could do. So knowledge. Knowledge would be that part that if you don't like to have audiobooks and you don't like to read and you just want to do something else, you can do it. You can pay for seminars or for workshops. You can hire a specialist. That said, the last part would be like out of knowledge we can talk a lot, and we're going to talk it in the questions and answers. But we will as well, just for finishing and giving the time to chew, is understanding that protection is a must, and savings must have a goal, as Stu will say. And then, just then, we will invest. Because if not, again, I would not advise anyone, any of the participants, any of the 20 plus of you guys to invest without being protected or having savings. Now, please, Stu, if you can, let's talk about goals and investment that we should be doing.
Yeah, thanks a lot. That was very, very insightful. And I 100% agree to everything that you just said. It's all about steps. It's kind of like playing Mario Bros. So you have to go from level 1 so you can go to the next step and the next level. You cannot simply just go and save the queen and that's it. You have to go through all the levels first, right? So yeah, I'm going to continue with what you just dropped, which is having our goals very clear. And it's weird that you just see a big jar of beer on the next slide, but there's a reason, believe me. So why it's important to have goals? Because otherwise you're just doing, you don't know where to get. So for instance, one of the goals that you may have and that most of my clients and most of the people I speak to, they have is actually, I don't really believe that much on retirement. It's more about financial freedom, especially because retirement is a more outdated concept from other generations that maybe the government will take care of you or other companies will take care of you. So basically now it's up to us, right? So let's say that you want to have financial freedom. So now working is just an option. It's not a must, because I'm sure that many are still working because even if you enjoy it, you still need to pay your bills, right? So the idea is that at some point you're going to have a passive income and from somewhere, from either that's your investments, from your properties, from whatever. So that income is going to be enough to fund your lifestyle. And then working will be just an option. So that's why we need to have a clear objective of how much is that income that you will require. So let's have an example. Let's say that based on your current lifestyle, you think, okay, as long as I have $3,000 a month, that will be more than enough to cover my bills, to cover my rent, to have some fun, and then that's it. If I don't work for a year, it doesn't matter. I still get that $3,000 each month, and it's enough. And if I do something extra, then it's just extra. I can just have an extra holiday or whatever. So what you have to do first is think of what will be that goal for you. So let's continue with this example. So that means this person would need a 36,000 annual passive income. 36,000 from doing nothing, that's not easy, right? So now how do you get that money? So the idea of having this financial freedom is that you have a very stable $3,000 each month, because if you're still paying a rent, you still have to pay that rent regardless of what's happening to the markets or if there's coronavirus or not. So how can you make sure that you get a very stable 3,000 each month or 36,000 each year? So this is the way, that's why I use an analogy of having a beer, because in my mind, our assets are like a big jar of beer. And the idea is that we are only going to take the foam that it produces. You don't drink the liquid, you only take the foam that it's producing. So this foam that is producing is going to be the returns, or the things that is producing all your assets. And this way, your beer is never going to run out, because you're only taking what it produces at the end of each year. So if we consider 5% a stable passive return, then we can just simply go to calculate. So let's say you already know this 36,000 annual passive income that you need. Then if you divide that by 5%, that means you need in assets $720,000, or your beer should be $720,000. I hope I'm not losing you with the math. The idea is that you don't need, this doesn't mean that you need to have $720,000 in your bank account, this is gonna be the combination of all your assets. Maybe you have a property, and maybe you have a retirement account, and maybe you have other investments. So if these in combination are worth $720,000, and then they produce 5% per annum, then you have your 36,000 to be financially free. So that's the very first step, or that's an example of how you can, or you need to have SMART goals. So SMART goals is the acronym. Probably you've heard of it. It's not just for finance, it's for pretty much everything. They have to be specific and they have to be measurable. Otherwise, you don't know where you're going. And they have to be attainable. So yeah, maybe $720,000 in assets may seem like a big number. Many times the beer, based on whatever your goal is, can be more than $1 million. So maybe just thinking of that doesn't seem attainable. But once you start to break it down to, well, I don't have my beer now, but I'm gonna give myself 15 years or whatever, or how many years you wanna get there, and then you start to break it down, you're gonna see that it's actually attainable. And it has to be relevant to what's your goal. And at the end, also you need a time base. So you give yourself a specific measure so you can actually get there. So I'm gonna give another example that can, because usually this tends to be the biggest goal that you may need financially to reach financial freedom. But as I mentioned, this beer that you're gonna have is gonna be a combination of different things, because that's why we're talking about diversification, not don't put all your eggs in one basket. So this 720,000, you may want to have at least one rental property in it. So now let's talk about having a property, because many clients, many friends, many people tell me, I have an illusion of buying a property for investment, but it's always there. It's just an idea. It's not really concrete. That doesn't lead you to take action. So how can you make sure that you can take action? That's when you start also doing these SMART goals. So you know it. So when you think of buying a property, well, first of all, if it's for investment or if it's just for you for living, those are very two different strategies. Because if it's for investment, forget about, oh, I don't like this color, or, oh, it's not next to my family or my parents, they cannot look at it. Like, no, it's for investment. It doesn't matter. As long as it makes sense as an investment, then it's fine. So that's also a struggle I see a lot, or a mistake. So you just need to make sure that it's going to be a good investment for your goals, which is either having that passive income or whatever your goal is. So now let's work on what could be a good SMART goal regarding real estate investment. So the idea is that if you are looking for this, you're only going to put some capital of the value and then get a mortgage and then someone else pay the rest of the house for you. So then your goal could be, maybe you want a 200 or 300,000 property, but you don't need to pay everything. So you may need just a down payment of $60,000. Let's say maybe you're starting from zero, so which happens a lot. Let's say today you don't have any of that yet, but at least now you have a more clear idea. Like, I need $60,000 for a down payment, and I'm gonna give myself 10 years. So now that you already give a very specific amount and a timeline, then you can start working out on how you can get to those 60,000 in 120 months, which is 120 years. So you can do it many ways. Save on a monthly basis and put your money under your mattress, which is basically getting 0%. It's valid. I wouldn't recommend to do it, but you can do it definitely. So if you want to do it that way, that means that every single month you're gonna need to be saving $500 and put that under your mattress, and hopefully no one robs you. But assuming you do it on a monthly basis, you're still gonna get to 60,000. It's gonna be everything from your pocket, but you get there. And other ways, instead of getting 0%, I'm gonna either put it on time deposits, which already Ricardo mentioned that at least in the US, you can get maybe 1 to 2%. It's not a huge difference, but that's something. Or you wanna look for other investments that give you 4% or 6% or 8%. Now we're not gonna talk about what gives you those percentages. It's just for you to have an idea, or to realize, like, okay, if instead of getting 0%, I get 8% per annum, then I don't need 500 per month. I only need $330 per month, and I'm still gonna get to 60,000 in 10 years. So here you can see the difference the blue part shows how much would you be paying or contributing from your own pocket and in 10 years versus the green side, which is how much is gonna be from the growth. So then you have options. Then you can decide how you're gonna get to whatever your goal is. And this is just an example. Maybe you don't wanna do it 10 years, maybe you wanna do it in 3 or 5, but the idea is still the same. After you already know how much you wanna, or where you wanna get, and then you give yourself a timeline, then you have options. You can decide whether to do it on a very old style way, put it under your mattress with 0%, which is still valid, but then it's gonna maybe take you more resources, or you wanna get in different ways. So that's why SMART goals are very important, because they're actionable. They already show you different scenarios, and now you can choose. And that's why you have control, opposite to gambling, because gambling, you don't really have control. I mean, maybe if you put $10 and you gamble in a really weird thing, you can make it to 6,000. But anyway, that's a different story, right? So that's my part on terms of having very specific goals. And one thing that Ricardo mentioned is usually we should focus on personal savings and retirement. And at the end, for me, it's also about financial freedom. Actually, now, most of the time, many of my clients are also same generation like me, so they're also millennials. So they come from different countries. So of course, many of them also don't really believe that a government or a company will take care of us anymore. So now it's up to us to actually get there. So now, by having these goals, then you can actually take action. And so now we can move to the next part of investments. So that's the step 3. So for investments, as you can see on the pyramid, if you're using your phone or your screen, maybe it will be a little bit harder, but there are so many types of investments. So there are the traditional investments, which can go from cash, bonds, stocks, to alternative investments, which can go from some a little bit still traditional, like real estate, Forex, but also go from even wine or many other things. But the idea of today's presentation is not to focus on lots of that. I don't want to confuse you too much. The main thing is still going back to the same. You need to have a strategy, because based on your strategy, we all are very different. We all have our own goals. We all have our own special situations and circumstances. So the way you're gonna choose your investments is based on what's gonna fit your final goal, or different goals, because you can have multiple ones. So I'm still gonna mention different things about asset classes, just to give you an idea that you may already know or not. So for instance, and these are still in the traditional area. So this chart just shows what are some of the main categories. As I mentioned, the main categories for traditional assets are stocks, which are basically companies, bonds, which are debt, either because you give debt to a country or to a company, which are bonds as well, and cash, which is basically Alipay, WeChat, or even some short terms. So here you can see that different asset classes perform differently as well. And here in the first part, you can see the large cap, which means the biggest companies in the US. That's why the index for that is the S&P 500. I don't know how familiar people are with indexes in general. Or can you write in comments, do you know about indexes in the US or Europe, or what are the main indexes that you have heard of before, just to see where our audience or our attendees tonight are in this aspect, and try to keep it as easy as possible. So just let me know. So for instance, the 500 biggest companies in the US over the last 50 years have produced around 9% per annum. A little bit less, but close to. So that's an average. That doesn't mean that every single year it grows at 9%. It's just as an average, it gets almost that amount. Some years, that's why it shows the best year can get 32%, but also the worst year, it lost 37%, which is also a big amount. So then this already shows you that, I mean, you can see that there's a huge difference, like 60% between both of the good and the bad years. But in an average, so if you're thinking on a long term, these kind of investments can give you around 8 to 9%. And then you can see different ones. So you can see small caps, which basically means smaller companies. So this is basically the US, the first two. Then there are international companies, also emerging markets, and different types as well. So from here, you can already start to see that there are different asset classes. And here we're only talking about traditional ones. I'm not gonna focus too much on alternative, because that's gonna make it even more complicated. But from here, you can see that there are different ways to start growing your money, which you can start linking back to what are your goals. When you already know, I wanna get to $60,000 in 10 years by saving, then you can go, okay, now that I know that I wanna get 6%, then what kind of investments gives me around that percentage? So this will be the very last step. So here, this is already quite simple because it gives you an idea of how you can start growing your money over a long-term period. And here, this is a chart that most fund managers love to use all the time when they try to sell fund to many investment companies. So here is, I forgot what they call it. But anyway, so here you can see many colors, and it gives you by year how each asset class perform. So we're still using the same ones from the previous slide. And you can see, like, for example, we go to 2005. So EM still is emerging markets. So in that year, the one on the top means the one with the highest return that year. So emerging market companies that year gave 34% returns in 1 year, which is amazing. And you can see that 2005 until 2007, it was on the top. But then 2008 happened, and then you saw that lost a lot of money. And if you want an interesting example or exercise to see, is there any of those who are always on the top, like all the time? Just try to take a look and let me know in the comments if you see one of them. If you had to choose only one of those colors, which one would you choose? Assuming, because as you can notice, there's no one that is always on the top, right? So you can see how hard it is for professional investors to choose an asset class that is gonna perform the best every single year. None of them can every single year perform the best. So the one that you can see on the gray, that's kind of using a mix. So it's an asset allocation. It's a mix of everything. It's a mix of emerging markets. It's a mix of international investment. It's a mix of US. It's a mix of bonds as well, real estate. So that one, assuming you use a mix of all of that, you're never going to be at the top. You're never going to be at the bottom. So it's kind of taking a safer approach. Sounds confusing, right? The important thing, that's why for me, and whenever I have a conversation with people, I try to focus more on what are your goals? Don't focus on the economy, focus on your economy. Like, okay, my goal, let's say one of my goals is to buy a house in 3 years. Then I need to set what that goal means, whether I need 30% down payment for a 200,000 house, and I want to save it in 3 years. That means, well, just do your own calculation. And my long-term goal can be having financial freedom in 15 years, having a passive income of this amount. So based on that, then this is when you can actually start making some strategies to get there. Right now, definitely there are some investment options and some opportunities because, as Lucas mentioned, markets have dropped crazily, kind of similar to the levels of 2008. But before jumping into any of that, we can definitely have a one-on-one conversation with, you can also talk to Ricardo and to myself as well to go on, okay, what's available. But before even trying to add us on widget and ask us about that, you first yourself focus on your pyramid. Where are you right now? Have you passed level 1 or step 1? And for me, the idea is, because you saw that it's very complicated. For me, my investment strategy, I try to keep it as easy and as simple and if possible, automated as possible. because even myself, even though I'm working as a well advisor for my clients, I just want to let it run by itself. Even fund managers don't perform well, and they spend not just 9 to 5 hours on the day just working on that. They spend hours and hours, and they still make many mistakes. So I try to keep as flawless as possible my strategy as well, to let everything just go and run. And that's gonna make sure, and that's gonna make it easier for me and for everyone else as well to get to all the objectives that you may want. So here we can start to already wrap it up to, I mean, that's why I'm showing again the pyramid, because for me, this is the key. It's not about what has dropped. Should I go into oil? Should I go into gold? Should I go into healthcare or tourism companies? Or yeah, there's definitely a time, and also maybe part of your story could go into something, but the main thing is this pyramid. So I want to pass again the mic to Ricardo, so he can also tell us something else as well to just wrap it up. If there's anything else you want to share, or if not, we can just move to the Q&A.
Yep, thank you, Joe. It was amazing. As we said, any questions that you have, please ask them up. We'll check them up. But as Joe said, the most important thing, and I know that it sounds boring, and believe me, it's I get this from my clients as well all the time. You need to follow that pyramid with your heart. You need to understand that things will go up and things will go down. As Joe was saying, investments from 0 to 10% in that graph. I'm just gonna say this before we go into Q&A. The investment that gives me the lowest is minus percentage, which is keeping the money in cash, because, well, inflation happens. But all of the investments are actually affected by inflation, not only cash. So taking inflation out, just so we don't index it 1 second, cash, let's put it at 0%. And then CDs are about 1 to 2%. But then we have the dance studio, which, well, you know, in an average is about like a 9 to 12 to 15%, depending on which moment of equity I had. My Airbnb is about like a 24%. But then we go into Forex, which is the CFD, and that one is CFM, sorry. It's about 44%. But that means that I could also lose sometimes 44%, or I could lose 36%, or I could lose 2%, because the deviation that you have is not only upwards, it's also downwards. So if you ask me, would I put all my money in properties? No, I would not do. Would I put all my money in Forex? No, I would not do that. Do I have to keep all my money in my life insurance? Well, I would love to, because it gave me 12% last year, but no, I even can't. I can put up to a maximum by regulations. So you have to know which is your percentage that you want to take, and that you feel comfortable. And from that one, start doing little investments that might give you more or might give you less. That was my wrapping up. As Stu said, well, we're going to pass it to Lucas. But basically, any questions that you have, please write them up, and we will be more than happy to answer them.
Yeah, I mean, our QR codes are already there on the screen, so you can also add us individually. And maybe, Lucas, if you want to join us also in the screen, and maybe you can help us, moderate the questions and we just answer. So please feel free to start writing questions on the chat. I think we had some questions from before. We can already start with those, Ricardo, if you don't mind. I remember one from, let's go through the questions. I think there was one from Julia about credit card. Yeah.
All right, got it. Well, it's regarding emergency funds, so I'm going to take on this one. So Julia, that's a really good, fantastic question. Credit cards and emergency fund. So here's the thing. If you're in an emergency, yes, you can use a credit card if you do not have any savings on it. But should you consider your credit card as an emergency fund? You should not. The inconvenience is that an emergency fund is the amount of money that you're going to use in case of an emergency, but that you can actually have, the liquidity to use it. Now, with a credit card, if you have an inconvenience this month and you have to use, let's say, $6,000 for whatever reason, if it's on the credit and next month you don't pay it, then you're going to have a percentage that is going to be charged on it. So it's going to become a liability for those 6,000. So going back to it, money that you can borrow should not be considered an emergency fund. Your emergency fund should be high enough, those 4 to 6 months in average, in order not to have to borrow money. Nevertheless, if you were short on your emergency funds and you must borrow money from the bank, and there is no other option that you have, then you should go for it.
Yeah. Yeah, I agree. Credit card shouldn't be our main source, but if right now you're on zero, well, for now you have nothing else but start building up your own emergency fund. But yes, I think the next question was, hopefully I'm not missing anything, but there's one from John. He's asking how to invest in stocks when I don't have my trading account. No, when I don't want my trading account being liquidated after the market goes down. Well, my first question to John is like, well, why would the trading account be liquidated? Or what do you think, Ricardo, about?
Well, it depends. For example,
Unless it's yeah.
No, go ahead. I'm sorry, please.
No. I think, yeah, I think here it depends, as you said. If you are afraid of your account being liquidated, it's maybe because you have a trading account with a not very reliable company, then yes, that will be a concern for me as well. But as long as it's a reliable company, then that doesn't really matter. However, I should go back to what's my pyramid. So if, let's say you already have all your steps, then it doesn't matter as long as it's a safe, because usually a trading account is just a platform. It's not really, you're not investing in that company. It's kind of like having money in a bank account and then using your bank account to invest, which some banks allow you. I don't think in China, as foreigners, we can invest in like stocks, but in other countries you can. So here the platform is just a tool. It's not really the investment.
Correct. As you said, and John, I believe I understand what you said is, remember that whenever you have an account, you might use it for 3 main or big points. One would be for day trading, another one for swing trading, and another one for capital growth. For example, the amount that I have in NASDAQ, that is for the long run and it's part of my retirement plan, and I'm super happy with it. And that's what I have it protected. I have it with a bottom of 1%. And regardless of what's going to happen, that is an actual equity that I have. I own the underlying asset that goes with it. But for example, in my Forex account is different. My Forex account is something called a CFD, which is a contract for difference. Now, whenever I open a trade, I want to be out of that trade in the same day. And by the terms and conditions that I have with the CFD company, even though they're in SEC and in FINRA, they say, like, I agree that if I'm below my margin, they can close my account, and if I'm above the margin as well. But that's because it's a CFD, and CFDs are risky. CFDs are something that I don't recommend people to go into it, as I said many times, before having proper experience and proper knowledge. But when you go, as Chu said, with someone that actually, where you can actually own the underlying asset, such as the indexes or so off, then there's going to be no problem for that. The accounts want to be closed.
Yeah.
Hope that answers the question.
Yeah, actually, he just mentioned that he's using Quant Fury app account. Honestly, I don't know it, but if it's, because yeah, there's so many accounts anyway and platforms out there, and I've met many, well, not some people who have done nothing before, and suddenly out of nowhere they have a CFD platform. And like taking, like already going to level 10 before even having a emergency fund. So like, no, let's dial it down a little bit. Yeah, first of all, focus on the simple things before otherwise you are gonna be more concerned. And then Lucas is asking how to invest in stocks with RMB as a foreigner in China. So there are different ways, and one of the ways is like the way Ricardo is doing for his participation. Well, you can mention about that one. I can also mention about another way that I'm doing myself. So we can both share our ideas. But yeah, in terms of, for instance, because for myself, in Mexico, I did contribute for the short period I work in there, but I don't really believe on my pension or anything as well. And here in China, it's not that I have a Chinese pension anyway. So for myself and for some of my clients, And we can have, or we're doing like an international savings where you can use your yuan, and that can become an investment in a harder currency or more tradable currency, whether that's USD, euros, pounds. And that's a way to indirectly start, I don't know if we should say this here, but like repatriating some renminbi out of China while at the same time investing that money. So there are options to do it. That's one of the way I'm doing myself as well. But that's not the only way, because as well, there are other alternatives that also Ricardo is doing. And I'm also suggesting some of my clients as well to PAR, which also covers the part of the pyramid that we talk about. I don't know if you want to share something briefly on that as well, on how to, it's not direct stock investing, but it's an indirect way to invest, right?
Yeah, basically, how do I invest stocks with renminbi as a foreigner in China? I have not invested in the Shanghai market, so I do not know the process. Nevertheless, all of the investments that I've done with renminbi, as Chu said, they get legally repatriated to any of the outside countries, such as US, which any foreigner can do with their taxations in regular.
Yeah.
So what I believe that is the most important as well is, or what I recommend my clients, is to have different currencies. You want to have investments if you can, if you're allowed to, right? You're not going to have like $100 and then 100 euros and 100 renminbi. That would make no sense. But if you can have at least 10,000 or 12,000 of each currency, broadly, when you, well, $10,000 of another currency, my apologies, then that's something that is, you can actually protect yourself from economic crisis or big exchange rate change. And is there any way to open a trading account in China as a foreigner? As I said, I've never tried it here. Nevertheless, when I open my trading account, my forex trading account, I of course place that I'm a resident in China, and being a Venezuelan resident in China, I was successfully able to open it. If you have more questions about it specifically, I will let you know how's the process. If that's up, we have another question from Martin.
Martin. Yeah, there's one from Martin. Yeah, sorry.
Oh, my bad. Sorry, I was just reading here. Where to store the retirement savings? It's just such a good question. Such a good question. That goes really to what you said. You need to have goals. Without goals, there's nothing you can do. And what's your goal for your retirement plan? For example, myself, I love traveling, and I like to travel 5 countries per year. And I didn't come to work here. And I try this because I want to see more than 180 before I die. So part of my retirement plan considers this. Considers that I need to have enough money at the end of each year so I can do this. Another part of my retirement plan is about having at least $2,000 per month indexed by inflation, so I can live comfortably wherever I want. And that's, you know, with all of the other incomes that I will receive from any other investment. With that said, my biggest and most important retirement plan is with my life insurance. It's an index that, of course, I can get you like how it works later on, because it is not only the safest one that I've seen, it's also the easiest one to access. And you cannot put as much either. You're allowed an X amount, and after that, you will have to find other ones that might be in other currencies, as we said, or maybe a little bit bigger in the deviation and the percentage that can be made or not. But you want your retirement to be protected. And this is the key. How to store it? You're going to store it with a company that will give you a guarantee of that. And that's what's going to be for your retirement. And I can't emphasize that enough. You too, anything to add?
Yeah, so you know, it's very similar to what you said. It's all about your goals. So myself, in terms of, if you were talking about retirement, even though I don't really talk of that, but let's say, yes, in 15, 20 years about myself, I really don't know where I'm going to be in the world. So for that aspect, one of the ways I'm doing it is to find an international retirement, in quotes, as I say, international account, which is just want to be one of the parts of my retirement strategy. because I still don't know where I'm gonna be in 15, 20 years. I actually consider myself a global citizen. So that's why I wanna have a global citizen structure that allows me to, whether I'm still in China or whether I'm in Southeast Asia or Mexico or wherever in the world, it's gonna follow me and it's not gonna be tied to a place. So the most important thing is to define whether you're gonna be looking to be in like a international citizen for the long term or not, and then you can actually find what product suits you the best based on those goals. And very interesting that really talking about investing in Chinese companies, which as you said, you can, I mean, China just opened the opportunity for foreign investors to invest directly in Chinese companies, but it's not really for personal, it's more for like institutions. So if you have, let's say, 100,000 yuan, you're just gonna put in the Shanghai stock market, it's not gonna be easy. But there are also other indirect ways where you can do it. You can also invest, as they already mentioned in the chat, through investing in Chinese companies listed in Hong Kong or listed in the US. Also, you can invest in funds that invest in Chinese companies inside of China. So there are many fund houses like Fidelity, Vanguard, many others that have funds that specifically focus on Chinese companies. That can be Tencent, JD, Alibaba, Ping An, many others. And then that's another way to also have some exposure to the local market. I mean, local that now we are all living in this part of the world. So that's one of the ways as well to do it. One for you about life insurance. Julia mentioned that her life insurance did not make 12% last year, unlike Ricardo's. Yeah, it's not.
My life insurance.
Yes, because there are many products out there. So of course, all of them are very different. Maybe you can have a chat with Ricardo to show, so he can share a little bit more on how come he already mentioned his life policy is also linked to the Nasdaq. So basically, that's what Nasdaq did. I mean, Nasdaq did even more, but of course, there are some terms and conditions, right? So, but yeah, definitely will be useful for you, Julia, to have a chat with Ricardo to see how your policy can also make the same.
So yeah, like as you said, yeah, the life insurance I have is pretty simple. It's 12% if it's above 12%, 1% if it's below 1%. So I'm pretty happy with that. It's a very safe investment that also helps me out into being part of my retirement plan. I don't know if we're skipping questions, but I just like after the life insurance one, then there is.
I think after no. So now the ones from Lucas and John are like, where are you investing right now, especially during coronavirus? I guess. Yeah, I was expecting this to come for sure. I mean, there's gonna be some boring again, but it depends on your goals. If you're thinking I'm gonna invest for long term, I wouldn't say anything because definitely not. But right now, for sure, I cannot tell you how long this thing is gonna last. I wish I could, but I don't know. Even if I was a medical expert or anything else, still I wouldn't know. But what I do know right now is that today, compared to a month and a half ago, markets are at a 30% discount. So what I do know right now is that if you wanna go for a safe-ish, just invest in an ETF that tracks international market, whether that's the US or something else, because right now it's a 30% discount, and we know that over the long term, it's gonna recover and it's gonna be done. If you wanna just have an investment so you can just profit and try to sell it in a week, honestly, let's just go gambling and we're gonna have more fun than just putting your money in a trading account. But for the long term, medium to long term, definitely, as long as you go for the international markets, because personally, I'm not really going into individual stocks. I have some colleagues that do go as well, but in my personal, the way I'm doing it, I'm just going for the global economy or US indexes or things that I know that over the long term are gonna go back to normal. Because I know that any company in the world can just go bankrupt or can go down. Even Apple can have a really bad year and still gonna go down. I mean, I hope they won't, but I think just choosing one company that's gonna go or it's gonna make you millionaire is gonna be really hard, and it's very similar to gambling unless you are a professional investor that's spending all the time doing your research, which I'm not even doing myself that. And I plan for what are my goals and help my clients to get to those goals. I don't know what's your opinion on that, Ricardo?
Yeah, like I see. I agree with you. I see John's specific question as well, and very specific answer. Just John, the most important thing to do in the coronavirus, as we said, is everyone that does not have an emergency fund, start making it. Do not think about anything else, but make it. Very clear, very simple. It's the less riskiest thing that you can do, and it's going to give you peace of mind. After doing that, go to the other three parts that we have to get into this protection level. When you finish your protection level and you start saving and you have knowledge and you have the goals that you want and you want to invest, then a specific investment, for example, retirement plans, it's an index that is called NASDAQ 100. Now, how to get there, how to do all these things, you can contact you or me. It's you know, it's even though it's extremely amazing to do, the process could be quite confusing. But NASDAQ 100, check it out if you want, guys. You can like Google it up. It is right now at about 7,000. It's Tuesday. It's in big discounts right now. And you want these things for the long term. You don't want the things for like 1 day or 2 days. For example, I'm just gonna show this real quick. Like this is my trading account right now. So you know it is flipping around, and I love it. And I love this for the short run with a speculative amount that I don't recommend you to do right now. I recommend you to go first into the safe retirement plan step, which would be with something that had proven to be good in the future. NASDAQ 100 owns part of Apple, parts of Microsoft, part of Amazon. Those index are the ones that you should be focusing on, and how to access them is what we will be discussing one-on-one, because if not, we're gonna need a few more weeks of a webinar.
Yeah, I mean, yeah, if maybe John already has all those steps covered. So yeah, definitely if you already have that, we can talk, yeah, on one-on-one, because everyone has their own particular situations. Because yeah, definitely you already have all protection level covers, something for your long term as well. And now you want to be more speculative. Definitely there are things for speculative investments. But yeah, we can definitely have a one-on-one conversation for that to see what other things you could do as well.
I like it. I like the leverage question. If we have time, I'm going to answer about it, because I think leverage is a very misunderstood and amazing thing that everyone does, but no one likes to call it a leverage. Before that, though, I think there were a few questions above, and I'm sorry if I missed them.
Okay, let me see.
Yeah, Lucas asked, how would you choose between retirement savings as part of social insurance and direct investment in the stocks and real estate as retirement income? Well, if I may say very short, very good. It depends on the goal that you have, Lucas. Depending on the goal that you want, is the kind of investments that you will do. Once you set up what's the retirement and why do you want to have that retirement? Do you want it to be part of your future income? Do you want to cover your current life expenses, or do you just want it to be $1 million a month? Whichever it is, if it would be $1 million a month possible, it would be amazing. Tell me the trick. But after setting up that, then you will know which kind of investments you will want to do in order to achieve that goal. For my retirement, it's very simple. My retirement has the long-term part in the indexes. And with that, I'm able to every month put an X amount of percentage of my incomes into it. And every month I do it. I don't care if the market goes good or if the market goes bad. I don't care if it's a crisis or if it's not a crisis. I put that money into my account. It keeps growing up. And I will get to those 720,000 beer glass that we saw with Stu. And I'm sure about that. Now, when I consider, for example, my dance studio, my Airbnb, my Forex, my companies such as RSL or BMI, that doesn't count as my retirement, but they help me to get there. They help me to get that very small deviated account for retirement. So then again, there's plenty of retirement options that you can have. We can go one by one later on. But the important thing is to know the goal first. And without a goal, you're never going to find the correct time nor the correct product.
Yeah, just to add a little bit on that is really about what your beer. So let's say your beer has to be $1 million in 15 years, Lucas. So after you already know what size of beer you need in assets, that's when you can start kind of building your portfolio, creating, because the way you build it is also very personal. And Ricardo mentioned that for his beer, he's gonna put a lot of eggs in that basket for the life insurance. Other people, because there's also very cultural things. I talk to many Spanish people, they love properties, and they want the whole beer to be properties, which I tell them not. It's okay, it can be a big part of your beer, but it cannot be all of it, because then you're having too many things in just one asset class, which are real estate. But anyway, it still is a valid thing. You can have a preference, definitely. So then you choose what will be the main component of your beer, and that's how you can start to break it down. So if you want, I don't know, 40% of your whole retirement coming from rental income, that means maybe you need $400,000 worth of properties. And then the other 60,000 from other things. So the idea is, the first thing is to define what's the size of your beer. And after that, you can start allocating some percentages to the different things that you want to produce the income for the long term. I hope that makes some sense.
Right.
All right, guys. So I think we are already running out of time.
Yep.
So I would like to thank you very much for a very interesting presentation. I think that, as you say, everybody needs to first clarify what are their goals, because of course there will be a lot of opportunities for speculators, also for those that want to play it safe. And I think actually, like right now or in the coming months, it may be the right time to start working on your investment strategy, because of course it's always better to start when the prices are low and then slowly move in and start investing. So I think it's a good opportunity for everybody to take this now more seriously, because of course there is a lot of challenges, but as we say, the challenge is also it's also opportunity for those that are prepared. So thank you very much again, and if anybody has a question or wants to learn more, you can scan the QR codes and follow up with the guys directly.
Yeah, also, well, we can put our email in case that not everyone has WeChat. I just thought about that. I don't know if
you can share in the chat.
Yeah.
Oh yeah, as well.
Yeah,
And we will also share the recording of the presentation to all that registered after it's ready.
That's great. Thanks a lot, Lucas, for the invitation.
Okay, thank you very much and have a nice day. Bye bye.
It was a pleasure. Thank you. Thank you very much.